In today's interest rate markets, let's take a look at the shorter end of the curve at the two-year note futures as they're experiencing some heavy selling pressure today. Two-year note futures coming off of 6 consecutive higher closes to trade lower today, and with today's price action, we're basically giving up most of the gains for the week. That September future now trading at 101.28.7, which is basically the low print of the day as well, as we continue to see selling pressure persist throughout the session. And really, the primary driver today appears to be the non-farm payroll report this morning, much stronger than anticipated, shifting the sentiment in the market based on some of the previous data earlier this week in the employment front, as well as late last week on the inflation front. And now putting the Fed squarely back into the picture next week, a Fed announcement, but really more the sentiment shift now that the Fed may hold on rate moves later this year, as we're seeing a shifting expectation as to when the Fed might cut, which is now put back to about 50-50 for September when it came in this morning, about 80% or higher. So a big shift in the dynamic there in reaction to a strong labor report. And looking at the yields, we're looking at that two-year yield moving higher today by 16 basis points. So we're seeing it up at the 488 basis point level. Basically, as I said, that's kind of where we started the week. And when you look at the yield curve across the entire curve, we're seeing higher yields, lower prices pretty much from the 6-month all the way out to the 30-year, with the heaviest selling pressure in the 2s, 5s, and 7s. But even when you get out to the 10-year, I think that's down about 15 basis, or higher by 15 basis points today. So selling pressure pretty consistent across the curve today, with the two-year note realizing some of the heaviest selling pressure, moving those yields up by 16 basis points and pushing us down towards the low end of the range for the week.